your total cost would be this plus this. So keep a note of it. What is the total cost that you have got for your products? W, X, Y and Z. Now let's do the same calculations but with ABC costing, so that we would know exactly where the difference is. Okay, let's do the same calculations with costing. Okay, so now let's do this with ABC method. Now I will copy this, and I'll just prepare a performer here. Okay, I will write here ABC method. Let's do the calculations. Now, how would you do it? For that, I would need to prepare a table. Okay, let's list down the products here. So, let's list down the products here. It's W, X, Y and Z. Okay, now let's list down the overheads. No, sorry. Let's list down the overheads here. Okay, let's list down the overheads. Overheads are the short run variable cost, setup cost, scheduling cost. Okay, then we have material handling cost. We have just seen some examples as to how to use the cost drivers. We will use that. But here first I will write their dollar values. So dollar values are 3080. Then we have 10920. Then we have 9100. Then we have 7700. Get the totals here. And we get 30,800. Amazing. All of you are doing terrific. Very good. Now let's, what is the next step, guys? Once you have the overheads, we have the different activities. Now we need to assign their cost drivers. Very good. Let's have the cost drivers in place. Okay, so now let us know what would be the cost driver for a short run variable cost. It would be the machine hours, right? Let's have the machine hours here. What would be the cost? What will be the, the driver for a setup cost, number of production runs? Already given you that list and we've already gone through it. So the same I'm applying here. Scheduling cost, again, number of production runs, and material handling cost, number of production runs. So here if you see, I have not used only labor cost. I have not used. Okay, now let's allocate these costs, and first let's get the cost per cost driver. First step, identifying the overheads. Second step, identifying the different activities. Third step, identifying the cost drivers. We have covered them. Now fourth step, identify the cost per cost driver. So let's do that quickly. Cost per cost driver. Can we do it? Of course. So for that, first I will have to write it here, the numbers, okay, so that I can use the formula directly. What are the total number of machine hours? Again, you need to multiply, which is same like labor hours. So we've already calculated labor hours here. I can link here and take the machine hours, same, because they are same, right? Now, number of production runs. So you already total is given to you, 14. Let's have the total here, 14, 14 and 14. I'm sure till this point we are absolutely clear. Now let's allocate the cost per cost driver. So we will have this dollars, that is the overhead cost, divided by the number of machine hours to get the cost per machine hour. Again here I will do the same. So here I will get cost per production run. Here also per production run. Same. Now we have been able to do it. So now allocate the cost to the different products. So we have the products W, X, Y and Z. You will first write here the drivers that they are using, right? So I will write here drivers used. Which are the drivers used by them? Okay, so first let's make a heading for machine hours and then I will write here production runs. You know, the more that you use Excel properly, the more it will help you in section C questions. Okay, so let's do it. Machine hours are, I can link it directly with the labor hours because it's the same. So machine hours are going to be 1 multiplied by 10 and 3 multiplied by 10. Okay, so let's do it here. 1 multiplied by 10, which is 10. 3 multiplied by 10 is 30. Then Y would be 100 and Z would be 300. Okay, production runs are also given to you here, 2255. So 2255. Now let's allocate the different overheads based on this. So let's have the overheads listed here and then I will do the allocations. Okay, overheads, short run variable cost, setup cost, scheduling cost. So what are you observing here? That now we are allocating the overheads based on the different categories and we are not just applying a single blanket rate, correct? So now short run variable cost, setup cost, scheduling cost, and then we have material handling cost. Okay, now let's allocate it to W. So short run variable cost is 7 per labor hour, 7 per machine hour. Multiply it with the number of machine hours. I'll get for W, likewise I'll get for X. 7 multiplied by 30. Again here 7 multiplied by 100. And 7 multiplied by 300. Okay, great. Now let's do the setup cost. So setup cost is based on production runs. It is 780 per production run. Production run here is 2. So 2 is going to be fixed here. I can just fix it with dollars. You want to know more information about using Excel? That also we will do in the class. Okay, so I've calculated with respect to production runs, the entire setup cost, scheduling cost, material handling cost. Now likewise, I will do for product X. Product X again, the number of setup cost multiplied by product X has 2. Right? 2 production runs. Again the same. So again I will fix this cell so that my life becomes easy of doing the calculations. Yes, all of you. It's the same that we have got because the number of production runs are same. Here you will find the difference. So here it is 650 multiplied by 5. The number of production runs here are 5. Again I'll fix the cell. And it is what that I'm getting. Okay, now let's do the same here. So I'll again multiply this number of production runs multiplied by the cost per production run. Okay, for Z. So again, Z has 5 production runs, so it will get the similar value like Y. Let's fix this cell and then we can drag the formula. Okay, now we have seen, you can see that I've got the overhead cost for all the products, but this is not the per unit cost. What we need in the formula is per unit cost. So let's calculate quickly the per unit cost, get the total of the overhead cost. Okay, the total overhead cost is this. So we have got the total here. Now we will divide it by the number of units. Okay, so when we divide it by the number of units, you will get the total overhead cost. Number of overhead cost per unit. Here the number of units are 10, 10, 100 and 100. So let's take these figures 10, 10, 100, 100. Okay, now get the overhead cost per unit. This you will use in the cost sheet. Okay, so overhead cost per unit. Overhead cost per unit is 403, 417, 106 and 120. I hope I'm absolutely clear with this. Now let's take it to the product cost. And when we were preparing the cost sheet, I will just copy this format and I will recalculate it with ABC. So let's calculate the unit cost under ABC. Activity based costing. Okay, direct material, direct labor will not change, only overhead absorbed will change. So here we will have overhead absorbed as 403, here I'll have 417, here I'll have 106, here I'll have 120. What do you find? Now let's do a comparative analysis. Okay, for product W, total cost was 95. Total cost was only 95. And here I'm getting a huge difference. It's 428. Again, for X, the total cost was 305. Oh, just a minute. Here, just a small thing. We have done, this is the OAR rate. This is the overhead absorption rate per hour. And yeah, for 1 unit, we require 1 hour and 3 hours. That's okay. Yeah. Okay, just see the difference. Here the overhead cost is only 70 allocated and here we have 403. Okay, you can see the huge difference here. So what does this mean? That even though W was able to manufacture 10 units, its overhead cost was huge because yes, I can just get the total of all the costs so that it's always good to have the clarity. Yeah. Okay, now what you see here, W has got the allocation of 403 overhead cost per unit. Okay, when we add it here, I get a total cost of 428. I'll do one thing, I'll just get the comparatives here so that, you know, we can do the comparison. So as per absorption costing. Okay, look here. Now when I take this as per absorption costing, look at the difference. Here W we have valued or we have taken the cost per unit at 428 and here we have taken the cost per unit at 95 only. Here we have taken 512, a huge allocation given to X. Right, but here it was only 305. Here we had given such a low allocation of only 95 and here we have given 131. Here again 305 and here it is 215. So what do you see here? In overhead cost, in the absorption costing, the products that were having more units, they got more share as compared to the products that had low units, they get low share. Okay, I hope it's absolutely crystal clear to all of you, this fundas, all these pointers, and if you have any questions, please reach out to me and please ask me. Any questions anywhere you have, guys? This is your absorption costing sheet. Okay, and this is your activity based costing sheet. Any questions anywhere? So what do you find is more appropriate? Activity based costing, because it is giving more reasonable basis to do the allocation of overheads. Okay, so it's always advisable to go ahead with activity based costing only. Okay, but of course it is complex. It has got its own share of disadvantages as well, which is not there for an absorption costing concept. Okay, so any questions, any queries, you can put it to me in the chat box quickly, very quickly. Okay, absolutely clear. Okay, now let's go further. Let's do another question. So all of you, let's do another question. Let's do this question. Question 2 at ABC. Again, one more question. Let's have a discussion. So I do hope that all of you are able to answer this question. The following statements have been made about activity-based costing. Implementation of ABC is unlikely to be cost-effective when variable production costs are a low proportion of total production cost. Make this point very, very clear. Implementation of ABC is not likely to be cost-effective if variable production costs are a low proportion of total production cost. How would it matter? If they are a low proportion, that means overhead is a large proportion. So then you have to think, will it be very cost effective or not? The cost driver for material handling and dispatch cost is likely to be the number of orders of raw material. We have just discussed in the example. So now what according to you, which statements are true? Only option number 1, only option number 2, or both 1 and 2, or neither 1 and 2? Can anybody answer it in the chat box? Quickly. Can anyone answer it in the chat box? Okay, then let's go ahead and let's discuss it. Okay? Yes, so correct answer would be only option number 2. Now, why only option number 2 would be correct? Let's think. Because of the statement that is given here. What is given here? Implementation of ABC is unlikely to be cost effective if variable production costs are a low proportion. Which is the statement itself is very wrong. Because if variable production cost is low proportion, that means my overheads are high proportion. So of course, when your overheads are high proportion, you would need more of ABC to make it more cost effective. So statement 1 is completely wrong. Statement number 2 is correct. What is the cost driver for material handling and dispatch cost? See, we can have multiple cost drivers, right? Not a fixed cost driver only. We can have a production run as well as the number of orders of raw material, because numbers of orders of raw material will also affect the material handling. The more the orders, the more material is to be handled and more material is to be dispatched, right? So therefore, yes, it is a correct option, and hence only 2 option is correct. That is the second option only. I hope I'm clear. So by this, I wanted you all to understand that these kind of theory questions can also be asked in PM. I know many of us find difficulties when it comes to theory questions. Okay, so what is important is breaking down the question in parts, like we just did, and just try to analyze it, through your applying your skepticism skills, and then looking into logically that which of the part of the statement doesn't look correct to me. Then go ahead forward. Okay, now let's take up more portions of ABC, the remaining portions that were pending, and then we go to target costing. Okay, so now I think we are absolutely clear that if I have to apply ABC, we know that ABC will be used when production overheads are quite high, activities are complex, because yes, it needs brainstorming to select the perfect cost driver, right? So when we have diversified products, when we have the production cost which is very high, when we have those activities which are not driven by just the labor hours, machine hours or units, but rather they are driven by other cost drivers, then yes, we need ABC to be in place. What are the benefits? See, with ABC, we have the correct allocation of overheads, and basically the correct profitability analysis can be made, because correct profitability we can arrive at. A more realistic approach it is, and also we can have cost control measures, because by this method we would effectively become to know that which product is having more overheads allocated to it, and because it is used more of those activities, accordingly cost control measures can be put in place, right? I hope you all are with me on this. But the negatives about ABC: time consuming. Imagine you have 1,000 pools. How much time will it take for you, even with the help of AI? Because you have to think for cost drivers, right? The correct cost drivers that not AI will be able to think. You as ACCAs would be able to help you. So yes, it is time consuming. It is expensive. It will have limited benefits, because especially in the cases where overheads are driven by hours or by units. So then yes, you could apply the normal absorption rate also. Why to go into this complex exercise? Right? And the most difficult part is assigning cost driver is a subjective concept. Wrong assignment of cost driver can lead to different values for ABC. So this is very, very, very crucial for any company. Right? I hope I'm clear till this point. Any queries, any questions, you all can put up in the chat box. So we have covered so far for ABC. My friends, ABC, we have covered the calculations, we have covered the steps. Now I'm sure the steps are on your fingertips. Any questions, any challenges, put up in the chat box and I'm going to answer them. Last pointer of ABC, and then we are going to discuss target costing. One of the most key areas, and section A, section B. Take it with almost certainty you will have a question from target costing. Okay, so let's unlock it as well. Okay, now quickly, if I have to see what is the use of ABC in the public sector. See, can we apply ABC in public sector? The most crucial point. Or in a service industry? Or can we apply it in the not-for-profit organization as well? So let's see the answer. Here I'm talking about public sector first, where we discuss it, in relation to a not-for-profit organization. So can I apply ABC over there? We can apply ABC to the areas like, where the funds are there. Because the public organizations are always funded, right? Government gives them funding and with which they run. You have those government hospitals, you go for the treatment for. So I'm talking about those hospitals as well. You will say, ma'am, it's been a while since I've gone there. Okay, so thankfully you're in good health, very good. Okay, but anyways, when you go to this public, hospitals, for example, there are funds given by the government to run those hospitals. Whether those funds are allocated or assigned to the correct purpose or not, that is very important. And this is the area where you can use ABC. Okay, so there the ABC will give you a lot of benefits and will also show the transparency to the public that look, where is your money spent? I can show you. These are the different activities to which the money has been spent. Rate per activity is this. This is the cost allocated to the each of the activity. Let's say the X-ray services, the ultrasound services, the health, the dental services, and so on. Right? So to which we can apply ABC. So here the only pointer and why would you apply ABC is, okay, why would you apply ABC? The most important reason is because we want to know the proper allocation of those spendings. We want to know that whether the public money is used in the perfect way or is in the way desired or not. So for that, we need to have the public accountability of these organizations. With ABC in place, yes, that can be done. But government needs to be that pocket full that it can spend money for ABC. It can hire people, those experts that can help with the ABC applications. Okay, now I have given a quick example. Let's have a look at it. A hospital needs to measure the cost per patient. Okay, that is generally the surgery cost, that what is their cost as an hospital for the surgery which is taking place per patient. Okay, so now here let's treat the operation theater as one cost center, and there are 6 operation theaters. There will be 6 cost centers. Okay, and then we will also calculate cost per minute. What is the total operation theaters cost divided by total available minutes that these operations, the surgery time is taking. So we can calculate cost per minute also, because, when we hire those consultants, the outside specialist doctors, cost per minute becomes very crucial. They charge per minute as well. Now, in the case of normal absorption costing, the surgery cost would have been what is the minutes used in surgery multiplied by absorption rate, but which is wrong, because different surgeries will have different cost. The different more specialization surgeries will have even more higher cost, and the normal generic surgeries will have lower cost. So applying an absorption rate is absolutely wrong, because that would just make this application on a very generalized lines. So how we can use activity based costing here? Look here. So now I will divide these activities in based on, I will divide these cost centers into different activities, like preparing the theater, anesthesis, the drugs which are given, that activity, surgeon's activity, consumable items, overhead activity. Finally, that is the admin cost, staff training cost and all that, nursing time and all. So then we will have different cost drivers for it, like for preparing the theater, what can be the best cost driver? The number of operations, right, for which it has to prepare. Anesthetic drugs, what can be the cost driver? The time from entering into this anesthetic room to leaving, right, or to recovery, because that is the period for which the drugs will have the effect for. Surgeon's activity, time from the start of the activity and close of the activity. Consumable items like gloves, like, you have those, syringes and all that, masks. So for all, that will be tracked on the basis of consumables used for every surgery. And finally, the overhead activity, the admin role, the other staff role relating to the theater operations. So all these will be the different cost drivers that are driving these activities. So you can apply ABC here so that we know the cost specific to each of the activities, and accordingly cost control measures or improvement measures can be bring about by these organizations Point to be noted, the result will be that the cost will be traced more accurately to different type of surgeries, which will give the actual result, which will give the actual, the actual scenario to the organization. So it can be very well applied to the public organizations as well. To the service industry, again, we can apply if we can have the different activities and the cost drivers assigned to them, but which is very difficult for service industry because the assignment of cost drivers can be very challenging, and as the service industry is consumed as it is, services are consumed, they are perishable. So due to these factors, assigning the cost drivers becomes very challenging. Okay, because there's lots of human involvement involved here. See, when you are more of capital intensiveness, then ABC is more better. But when you are more labor intensiveness, then you have absorption costing more better. I hope everybody is in line with me. Any doubts, any queries, please put up in the chat box. Absolutely stunning. Very good. Okay, now let's move on to the last topic for today, which is, my friends, target costing. So before we start with this topic, I think I need to give you a background. Friends, you know what? I'm planning to start my own, not classes. I'm planning to start my own grocery shop in the market here, which has already 15 more grocery shops in place, right? So what I'm doing is, because I want to start and I really want to earn profits, so what I'm doing is I'm planning to have I'm planning to have my own cost calculated, and then I will add profit margin to it, right? Everybody, this can be done, right? I already have 15-20 shops in that vicinity, and how I want to function is, I would like to have my own cost for the products that generally not, those products which I will be providing, like grains and all, which I will keep in sacks and I will be providing. So for them, I need to know what is my cost of sourcing them, and then I will add my margin that I want to earn, and then I will have my selling price. I hope this method is okay for all. Can we apply this method in the normal competitive environment? Please put up in the chat box. Can we apply it in the normal competitive environment? Think. I know what your answer would be. I know. You would say that, ma'am, it is very difficult to apply if you want to remain in the market. I mean, you have to be there along with 15 other shops. Okay, and now what you want to do is, you want to apply your own cost, your own margins, and then sell the product. Let's take an example. My adjacent shops, okay, of Mr. Ram and Mr. Raju, it is selling rice per kg based on the same quality of rice at 30 per kg, and one is selling at 40 per kg, and let's say 35 per kg, and I want to sell it at 50 per kg. I'm very optimistic. So now my question is, would I be able to sell this rice at 40 per kg, 50 per kg, and will I have takers for the same? Do you think I'll have takers who will be ready to buy at 50 per kg? Right? Then you will say, ma'am, you have to go give your USP that why your product is different. Okay, you have to give your USP that why would somebody go for your product? Why not to go for others' products, right? When they are cheaper. So if I say the quality is same, it is just that my costing is expensive, so I really want to charge a higher price. What would you say, ma'am? Then nobody will come to you. I know everybody will go to this shop, but they will not come to this place. So then what should be the correct way? What should be the correct way? So the correct way should be, when you know that you are in a competitive environment and your decisions will be affected by these decisions of the other competitive players, then we cannot assign the prices. Okay, then we cannot assign the prices that I want. I want to have the market driven prices, and accordingly I will look at the margin and I will look at the cost. So you will say, ma'am, that means we'll go reverse. Absolutely. I will start with what is the best selling price of this product in the market. Let's say the best selling price is 35. and I say that I want to have a profit margin of 20% at least on the selling price. Now you know what is margin and how do we calculate it. We have seen it in our previous class, right? So now we know that, yes, based on it, I will calculate the margin, which is 20%. I get 7 as the margin. So now I will calculate cost. That means whatever is your costing levels, you need to reduce it to 28 minimum, because this price cannot change. If you increase this to 30, then your margin will reduce from 7 to 5. So pressure will always be there on the margin. So what you are going to set is always for you target cost. So you will always set target cost for you, so that finally you are able to arrive at this cost. Okay, now you will say, ma'am, my actual cost is actually coming out to be 30. What should I do now? Now you don't have to do anything. You just have to try to close the cost gap. So this 30 minus 28 is your cost gap. So cost gap is going to be 30 minus 28, which is 2. So we would take steps to close the cost gap. I hope I'm clear. Everyone, absolutely clear till this point. Closing the cost gap means, boss, find out ways, fire people, have product optimization. See, most of the companies, they do it, right? So that the cost gap is reduced and you're able to remain in the market and be competitive in the market. Right? I hope all of you are able to understand till this point. Anybody with any questions, any queries, put a bit in the chat box quickly. So now you know what is the target cost, guys. In this competitive market, all of us, be it service industry, be it product industry, all of us need target cost to be calculated, because we have the selling prices fixed. We know the target selling price will reduce the margin and we will arrive at a target cost. Okay, focus should always be on how can you reduce the cost gap, because ultimate aim is to reduce the cost gap so that we are able to minimize the gap and we can bring a normal cost to the regular costing levels, right? That is the target cost levels. Okay, any questions, any queries? Okay, now let's do it further. Let's do the topic understanding even more better way and with more examples, and then we'll do questions like we have done for the earlier topics as well. So now we know target cost, simple definition. It is subtracting the desired profit margin from the competitive market price so that we accept the maximum acceptable cost. Beyond which, if you want to go for your costing, you can go. But then that will just have an effect on the margin. You will have to sacrifice the margins that you are making as an organization. Clear? Absolutely. Let's go further. So product people, just think where we can apply the target costing, in which phase. See, a product when it is developed, it is in the development phase, right? It is in the designing stage. It is in the launching phase. It is in the product is introduced in the market. It remains in the market. Ideally, when is the time when we can take efforts to reduce the cost? Can I reduce the cost once the product is launched? No, because all the things are out of my control. So when are the things in the control? You remember the nano car when it was manufactured by Tata? That time it was renowned as a 1 lakh car. The initial costing of the product was around 2 lakhs. It was not coming down to 1 lakh. So what Mr. Tata suggested, please source different materials. Okay, instead of the materials of the engine that you are using here, source a similar kind of different materials that are available at a cheaper rate. So when they did the sourcing differently, a bit designing change, then they reduced the price to 1 lakh. Okay, so this is where your target costing comes in place, right? So target costing simply says that boss, in your designing phase, in your research phase, in this phase when you're developing the product, when you're designing the product, that is the product time. That is the perfect time when you can afford, to reduce the cost of the product from what is your actual levels to what is the target cost desired. So we can always do those actions when we're in the planning phase, designing phase or development phase, because that is the time when you can do any plus and minus, any permutation combinations before the product is finalized and is launched in the market. Got it? So always remember, the best effective way of reducing the cost is in the designing phase only. Remember it. Okay, remember, because sometimes question will confuse you that the best phase is the production phase. No, because production phase means your design is finalized, your cost is set, everything is set, not just the machinery is making the product. How can you control cost that time? Controlling will always take before it. Okay, so remember, it's a design stage when the controlling takes place. Okay, this is just to make you clear. Traditionally what we do is, we will have a markup. Okay, we have a cost. On this we add markup and we get the selling price. Target costing says, boss, first fix your selling price. Second step is fix your margin and then you do target cost. Okay, this is what is suggested by target costing. I hope it is absolutely clear for everybody. Okay, now this is again just a summary that I have posted here. Okay, from a source. I have given the source so that it just helps you out with the flow that we have already discussed. Now I think if I put it very simply, target costing simply says that, boss, you have iPhone that is going to be launched, right? We all love iPhone, right? Even I love iPhone. Okay, so all of you waiting for iPhone 17 Pro? Okay, now you all know that even a phone like iPhone doesn't stay for long in the market, but still it earns profits. So how do you think they earn profit? Though we will cover it more when we do life cycle costing tomorrow. But one thing that you have to remember is, when the products are in the design phase, companies know that we just have 1 year to earn the desired profits. So why to put pressure on margin if we can reduce our cost? So in the designing phase only, they experiment with different kind of materials, different kind of raw materials, softwares, whereby the overall designing cost and the cost of the product gets reduced. Even the sourcing cost, even the outsourcing cost that Apple suggested also a few months back for bringing it down to India. Why do you think they would do that? For this reason, so that their cost gap is reduced and their margins are not affected. Okay, so now remember always that instead of checking cost after production, target cost controls starts at the design stage only. Focus is on deciding the price first, then managing the cost. Okay, focus is not on directly managing the cost, but focus is on deciding the pricing first. Traditional method, target cost, now we are knowing absolutely clearly about it. But one thing which is your focus area, boss, you have to reduce the cost gap. Okay, how would you reduce it? Redesigning it, removing the wastage, removing the delays, removing the inefficiency levels. Okay, all of that. I mean, that is simply bring in the ideal standards in place, bring in the TQM in place, bring in the JIT in place that we discussed yesterday, so that we have all these issues removed then and there. I have taken a quick example here just to make it absolutely crystal clear. Selling price is 100, profit is 20, target cost is 80. What is your actual cost? Let's say if the actual cost is 90, your target cost is 80, we have to try to reduce this cost gap. Okay, and we must reduce it by 10 before we start production. Because whatever we can do is before production only. So now just few more pointers. How can we close this cost gap? I think we have discussed some pointers. Let's discuss it more. We have to do redesigning. We have to do rethinking on what more we can bring in here to reduce the values. So for this, we have different methods that help us here. First is value analysis. Second is value engineering. Third is functional analysis. They all are interrelated. Okay, I will tell you the specific role of each of them. Okay, first let's discuss about value engineering. What is value engineering? Value engineering is simply the process that would start at the design phase only. Okay, it would start at the design phase. We will do the redesigning. Okay, we will try to have more replacements of the raw materials. We will try to have some replacement of the softwares used. Okay, and the purpose is okay, now the purpose is, sorry, I think there was a, I went on mute mode. Okay, now quickly. So now here, what is the purpose of value engineering? And I've written in the ACCA PM for the core reason that those MA students who may be just looking at, following here for their topics, for your syllabus, value engineering is not much relevant. It is more relevant for PM syllabus. Okay, now, but just have a look. So value engineering means when you have the systematic approach to reduce your pricings, reduce your cost. And how would you do it? You would do it at the design phase, at the planning stage only. And like I said, how can you do it? By just redesigning few items, removing the unnecessary cost, removing some items like maybe too much of inspection is there, so you reduce that time over there. Too much time of the expert is there, which may be proving to be at a higher cost. We would reduce it there. Okay, then simply value engineering means, so remember guys, see, many times I've seen students getting confused. Ma'am, we don't know what is value engineering and we get confused in the exam. How are you going to remember it? It is a pre-production step at the designing phase. Okay, it is a pre-production step. So that means we would redesign smartly so that we do the same work at lower cost. Don't we have it? For example, we have an item to be made. Okay, so that we have the item to be made. And now the same item, I get it from market A at 2000. Let's see, many of us from Delhi, right? So now we know there is a famous GK market. I get the same item at 2000. I get an item at GK market for 2000. Now I try to get the same item from Chandni Chowk at 200. And when you compare the two, say it's same, similar, it's serving my purpose. Cost gap. So this is the cost gap, assuming quality is not reduced. Disclaimer, quality is not affected here. Clear? So now this is your value engineering. That is, even Nano was serving the same purpose as maybe Maruti Suzuki Alto was serving. Okay, but yes, there was some quality issues, otherwise they were at the same levels, right? We have so many cars. I know many of you may be the car lovers. So we have so many cars that comes in under different names, but they almost carry the same specifications. And they're so similar that sometimes you choose why to spend 10 lakhs more when I get the same thing here. So that is reducing your cost gap. Okay, so if the estimated cost is more than the target cost, then you have to look into the way to reduce the cost gap. And how do you apply value engineering? Redesigning, avoiding the unnecessary cost. Okay, ensure that quality is not compromised. This is a core point, whether you do value analysis or you do value engineering or you do or you do functional analysis. For everything you will have the same focus area. Quality should never be compromised at the at the reduction, at the cost of reduction of cost. Your quality should never be compromised. Okay, let's have a question here to understand this better. So look here, target cost is, let's say, 80, estimated cost is 90, the previous example, and we have a cost of gap of 10. If we apply value engineering, then what can we apply? Like, for example, what can be the suggestions that we can make? Let's switch to standard parts. Okay, instead of maybe a specialized part, let's switch to standard parts. If that will not reduce your quality, this will save $4. Let's improve design efficiency by redesigning it. That may give us a saving of $3. Eliminate unnecessary features. Okay, for example, I buy a car that has got normal seating arrangements. Or there is the same car but with enhanced cost of 5 lakhs because suddenly the seats have some design patterns on them. Okay, now if that car is launched in the market, people may not be ready to spend 5 lakhs on it. So why do you want your things to be expensive? Delete it. Keep the simple cushioning. Keep the simple seat covers. Okay, maybe you just have 4 speakers here. Why do you have 8 speakers? Let that be an additional cost. But for your cost, by the manufacturer of the car, just keep 4 speakers. Okay, like this we can have cost optimization. That is elimination of unnecessary features. Now when you add it, yes, this is helping us to reduce our cost by $10 without compromising quality and bringing into the target cost levels. So this is value engineering process. I hope value engineering is absolutely clear to everyone. Just remember it. It is your pre-production step. It is the step that we take before the product has been launched into production. So it is done at the designing phase only. Okay, anybody with any questions or query, please put up in the chat box. Now we have other pointers like value analysis, very important. They look so technical, no? I'm telling you, they are not technical. They're very, very, very comfortable topics. So value analysis means what? Value analysis means you study all the cost. You study all the cost and then you see the value that can be assigned to it. Okay? And basically you study all cost, keeping in mind the value that they serve, and try to reduce the cost by looking at those pointers. Okay, just ensure that, again, the same point, that the cost reduction should not be at the cost of quality. Your cost reduction should never be at the cost of quality and reliability. What are the types of value that the product can serve? Let's take the example of iPhone. Right, I really want to take that example. So let's say cost value. So as per value analysis, the values that a product can serve is divided into 4 values. Cost value, exchange value, use value, esteem value. What is cost value? The cost price of the product. So let's say if I'm taking the example of iPhone, what can be the cost value? The cost of iPhone. Correct? What can be the exchange value? The market value. At what value you're going to sell it in the market. Right? I hope I'm clear. Third, what is the use value? See, what is the use that iPhone is going to serve? It will help you in clicking better photographs. Okay. Callings. AI, better use of AI and so on. So this is the use that it is going to serve. There are some uses that it serves which is add-on to any other phone that is being there in the world. Like I think iPhone 17 Pro has been launched with this pointer that it is the slimmest phone. Right? So the feature that it is carrying, which is something different to what the competitors are serving, is going to give you an added advantage. Like here for the PM classes, the live sessions that we have at BB Virtuals, they are going to give you added advantage because regular support, I was about to say 24/7, okay, but regular support, continuous support is going to be given to you by your faculty. You'll have regular doubt sessions, regular query solving sections, lot of mocks, personal evaluations, plus every week one practice session we will have where we'll do multiple questions from past papers, from my question bank, from different places that we are going to cover those questions. And you know that for PM, the key to pass, the key to get higher marks is by doing these questions, by having the conceptual clarity, which I'm sure in YouTube Live you're able to get it. Again, any concerns, any queries, anything that you want to inquire about, you can directly put this in the chat box and we will come back to you in a very short span of time. Okay, let's move forward. So now, esteem value. I'll give you one example. I have Nokia phone and on the other side I have iPhone, which looks good when I carry it and I go to my office, meet my friends, which gives me more of a prestige point. You will definitely say, ma'am, without doubt, iPhone, right? So it gives you a prestige point. And please understand that, see, ultimately the aim is your esteem value and use value should never be compromised, because this is your X factor for selling the product in the market. What can be compromised is only the cost. So when iPhone is being manufactured, the company can afford to compromise only on the cost without compromising on use value or esteem value, because market value will move with regard to cost only, right? And since Apple has got a monopoly in that segment, so really market value will not be much of an effect. Right? So what is going to be affected is cost, use and esteem. Ensure that whenever you take a decision in your exams, you will never look into reducing the use or esteem value. You will always focus on giving your advices with regard to reduction in the cost value. Got it? So now here, how can we apply the techniques to reduce the cost gap in case of value analysis? Like we have discussed for value engineering, we should make steps to cut the number of components, maybe get it replaced with a similar quality, cheaper components. However, be very, very clear. When we have cheaper components, there's a high risk. There is a very high risk that the customer may not go for it if the product has lost its levels of satisfaction or lost its levels of quality. Okay, so then the customer may never go for it. This happened with Nokia because when Nokia started its high-end products, due to the cheaper cost, the quality became cheap and it lost its market for higher-end products. And it could never actually have the hold again, right? So quality is utmost importance when people go for products. Adopting efficient technology. So now we have so many technology related softwares and such advancement of technology is there that with AI also we can look for optimization of the technology cost as well. And let's have the staff better. Why don't we hire a technical person only rather than getting the existing staff which is non-technical trained for it. Okay, so that we have the training cost saved, plus we will have more expertise on it. So any kind of non-value added activities, those activities which are not adding any value, which are not adding any use or esteem value should be eliminated directly. Okay, so value analysis says focus on use, focus on esteem, eliminate all the non-value added activities that is not needed, eliminate them directly. Okay, so just remember the most effective time to close the gap, as I've told you already, is the design and the planning and development phase. please remember that before the product goes live, all the changes should be made in place. Because after that, it will be very, very difficult to make those changes. Okay, now this is, so understand that in short, we can say that target costing says designing the products very smartly so that we have a balance of cost, quality and customer value. Okay, this is the core objective of target costing. Guys, be there till the end of the lecture and do subscribe to my channel, which is ACCA with Anshu Budhia. Okay, so that you would get all the updates on the forthcoming live sessions as well. And remember, you have to stay till the end because we will be doing questions on target cost also, multiple questions. So, okay, so let's do some questions to start with. All of you be there with me on my screen. Let's read this question. Take 1 minute, read it. Okay, let's do it. Great Games, a manufacturer of computer games, is in the process of introducing a new game to the market and has undertaken market research to find out about the customer views on the value of the product as well as to obtain a comparison with competitors' products. The result of this research has been used to establish a target selling price of 60. So we already have the TSP in place. This is the price that the company thinks it will have to sell the product at to achieve the required sales volume. Cost estimates have been prepared as follows. Manufacturing cost, direct material, direct labor, direct machinery cost, order and receiving cost, quality assurance cost. These are the non-manufacturing costs like marketing, distribution, after sales services. Target profit margin of the game is 30% of the target selling price. Okay, calculate the target cost gap and the target cost. So can we calculate target cost, guys? Can we calculate target cost, all of you? Can you put your answers in the chat box? What is the target cost? Put it in the chat box. What do you think is the target cost? Let's see if anybody can answer it. Guys, what is the target cost here? Okay, let's solve it. So now, solution. My target selling price is okay, let's do. So now my target selling price is okay, now my target selling price is 60 given to us. Right? Here it is mentioned 60. Now let's reduce the profit margin. The question gives me the estimation that the profit margin is on sales, remember? So now that is 30% of the target selling price. So I will take 30% of target selling price, which is 18. So I get my target profit, target cost is 42. Clear till this point? So now we are absolutely clear that my target cost is 42. Let's calculate what is the projected cost. So what is the projected cost? Let's get the totals. 3.21 direct material cost, direct labor 24.02, 24.03 plus 1.12 is the direct machinery cost. Ordering cost is 0.23 plus 4.6 because I'll take all the cost, right? Quality assurance cost. Marketing is 8.15. Okay, distribution is 3.25 and after sales service is 1.3. See, ultimately when I calculate target cost, I have to make room for all the costs that would come for this product. So it is coming as 45.89. That ideally the projected cost is coming as that for this product you would have a cost by doing everything after sale, marketing, distribution, ordering, direct material, direct cost, overheads, it's coming out to be 45.89. That means what is the cost gap? The cost gap is for 3.89. Now what the company should do, guys? Your company should investigate into the reasons that why there is a cost gap and they should try to minimize the cost gap. What can be the different ways to minimize? First, they should check whether non-manufacturing overheads, these costs, can we reduce them? Can we reduce some portions a bit? Okay, can we go for an alternative where we have some free sources where we can do marketing? Okay, distribution, so that the overall cost gets reduced. Ultimately, the management has to make aim that this cost gap 3.89 gets reduced. Okay, now let's go further and do the next question. Okay, let's do the next one. Again, a very interesting question, which is Exclusive Motors is designing a new version of its luxury car. Okay, luxury car Z123 series. Okay, very interesting question. Please have a look here. So now they are designing a new version of its luxury car, the Z123 series. The vehicle will be launched next year. It is expected to have a life cycle of 10 years. The production of the car will require an investment of 3 billion. Okay, 3 billion is the investment required. The company is needing a profit of 20% a year on this investment. So the profit desired is 20% of 3 billion. The marketing department believes that the car would be sold for a price of 40,000 each. 1 lakh cars would be manufactured and sold. Can we calculate target cost? Yes, I think it is very easy, so we can calculate it. Okay, let's do the calculation. So here, what is the TSP? My target selling price will be 40,000 multiplied by 1 lakh. I'll do one thing. I'll keep the figures in billions. Not billions, in millions. Million is by 10 lakhs. I'll divide it by 10 lakhs. This is your exam question. So I'll write here $million. Okay, your target selling price is this. Now let's calculate what is the profit margin desired. Profit margin desired is, okay, profit margin desired is how much? We have just calculated. Let's see that here. It's 3 billion multiplied by 20%. 3 billion is How much is 3 billions? So 3 billion is basically 1000 million, 3000 million. 1 billion is equal to 1000 million, right? So 3 billion is 3000 million. So that is 3000 million multiplied by the rate desired is 20% is the return. So let's do 20% return. And we get 600. Okay, so the profit margin desired is 600. Very good. Got it. So now what is the target cost? My target cost is very simple, 3400 million. Okay, so this is the target cost. Simple question, just to make you understand. It was a 2 marks MCQ question asked in 2019. Okay, now let's do target costing. The next question. One more question, let's try it so that it gives us a very good hold on the topic. Okay, now please look here. House It Company produces rabbit lahachas. Okay, it is about to launch. It is about to launch a new type of range hutch which it believes can be sold for $125. Okay, House It Company demands a margin of 25% on sales. So this is very easy. The selling price is 125, 25% is margin. So how much is the target cost? The target cost will be 125 multiplied by 75%, which is 93.75. Okay, simple, because 25% is the margin, so this will be 93.75. Very easy. Target cost. So this is my first question answer. Okay, now let's go to the number 2. Cost information for the new hutch is given below. Timber, felt roofing material, wire, labor, variable overhead. What is the expected cost? Let's calculate the expected cost. So let's add it. Okay, let's add it here. My expected cost will be, hutch requires 10 meters of timber. So 48, House It Company can acquire this at a cost of 48. So total cost to acquire is 48, not 48 into 10. It says that it can acquire this 10 meters at 48. So we will apply 48 here. Plus, it requires roofing. 2 square meters are required. Roofing materials cost 17.5 per square meter. We need 2 square meters. So I will multiply 17.5 multiplied by 2. Now let's add more. Wire is required. 1 meter of wire is needed at a cost of 1.5 per meter. I just need 1 meter. I will add 1 meter. Labor is paid at the rate of 7 per hour and we require 2 hours of labor. So what we will do? 2 into 7. Getting it? Now, then variable overhead is, this will be incurred at the rate 1.5 per labor hour. And we require how many labor hours? We require 2 labor hours, right? So we would require 1.5 multiplied by 2. We have just seen that. Now we will close the bracket. So I get an expected cost of 101.5. Let's see if it is there in the options or not. So expected cost is 101.5. Okay, we have this in the here as the option. So we got this correct. Expected cost, target cost. Now what is the cost gap? So cost gap will be equal to this minus this, which is 7.75. Okay, now though it is not asked, we have just calculated it. Which 2 of the following options would be the most appropriate strategies that house company can use to close the gap? Let's see it. Now we have to select 2. Make the hutch smaller? No. Ideally no, because it would affect the quality, right? So make the hutch smaller? Generally no, but let's look at the other questions. But if hutch is making it smaller, if it is not reducing the quality, hutch is basically where the rabbits will live. If we can make it smaller without affecting quality, then yes we can. Yes we can. But let's look at the other options. Raising the selling price, definitely not, because it is market driven. So we know for sure that out of these reasons, this is definitely wrong. In the exam also, you may have doubts, but the options which are absolutely wrong or absolutely right, first point them. And then you go to the remaining ones. It will help you to get the correct answer. Just see how. Making the windows bigger. Okay. Increasing the proportion of wire, reducing the proportion of wood. Now let's see, wire is expensive or wood is expensive. Accordingly, we can take this call because we have to reduce the cost, right? If we increase wire, okay, if we increase wire, wire is only costing 1.5 per meter. If I say for wood, wood is costing 48 to make one hutch and 10 meters. So per meter is 4.8. Per meter is 4.8. Here per meter is 1.5. So it is cheaper, right? So yes, we can go for this option as well. Use low skill labor, definitely wrong, because I cannot affect the quality or efficiency. It's wrong. Use lower quality timber, wrong. Quality cannot be affected. So straight away these three options are correct. So now we know that which two options are correct? This and this. And we got the answer. So that means we are not affecting the quality and we are getting the answer. I hope everybody is absolutely clear with it. Let's go forward and let's understand this as well. Okay, let's look at this question, which is, which two of the following methods can be used to move a currently attainable cost closer to the target cost? Think. Which two of the methods can be used to move a currently attainable cost very closer to the target cost? So what is the currently attainable cost that you have? If you want to make it very closer to target cost, which of the two methods you can use so that we reduce the gap? Okay. So basically we need to make improvements towards going to the target cost. So what we can do, let's read the options. Using standard components wherever possible, definitely correct. We have read it as a pointer also. We should try to use standard components wherever it is possible because that will help you to reduce the cost and have savings. We did it in value engineering also. Acquiring new or more efficient technology, I think it's better. Let's read the other options also. Making staff redundant, wrong. Reducing the quality, wrong. So I hope it is absolutely clear to you that these two are the correct options. Now I hope with this your target costing is effectively now one of the easiest topic that you have. Okay. And I do hope that it doesn't look as scary as you might have thought it to be when initially you were not studying target costing or when you are not begin with this live session. I'm sure I'm able to add value to you for this. Lastly, let's discuss this topic. Lastly, let's discuss this topic where we have application to the service industries. Can we apply target costing to service industries? Like, can I set a target cost for my work where I'm delivering the lectures? Okay, I can have a tentative cost, but keeping a very strict target cost is very difficult for a service industry. Do you know why? For example, the service industry is heterogeneous. We know that target costing is more appropriately applicable where standard products can be there, right? Homogeneous products can be there. Since every time I deliver a lecture, it's different, right? So it is heterogeneous. So now since service industry is such that when you're providing even housekeeping services, every day the housekeeping services provided are different from what was provided earlier. Because of human intervention, simply speaking, and because of the kind of nature of work that it is, the heterogeneity leads to the difficulty in application of target costing. Also, the customization, the perishability Can you store can you store the services? Like for example, you want to get your haircut done and you go to your most favorite parlor. Can you say that please just do the half work and I'll come back and then do the half cut? Can you store those services? That if I'm paying you for half an hour for cutting my hair, can you say that no, now your services are with me for the full day. Now you have to keep cutting my hair. Can you do that? No, right? So then yes, the services are perishable. They will end, they will finish off after a certain period. They are not going to have a longevity with you, right? So the customization of the services, the perishability of the services, the simultaneous consumption. I'm telling you, I'm guiding you with this lecture and you are consuming it. So that by the end of the lecture, you will sit down and do any target costing question. And I can tell you with surety, every question you will be able to handle. For ABC, for absorption, for target costing, everything. Okay, so now reducing, and therefore now here please understand, in service industry, your customer is playing a very major role. So the quality of services, the customer services, they actually lead to a major turnaround in service industries. Okay, now for example, like if I have to provide accounting services for 10 different clients, I may set a target cost for me. That's not a challenge. But what about the kind of services that they're taking? Not everybody will take the same services. And even if they're taking the same services, the in-depth, let's say everybody wants something to do audits. But for every company, the audit areas would be different. The heads would be different. The quantum of work will be different. The industry may be different. So all this would lead to different pricing being done by me to those companies. So having a target selling price is also difficult. We can have a standard selling price, but that will be always subject to customization based on the needs of the people. Got it? I hope I'm clear. Right? Even when the pricing we do, even when the billings that we raise to the people, we do it differently. Sometimes we have a different mix of senior and junior, sometimes only seniors, sometimes only juniors. Like for example, when we do the audits, start audits in a big four, you all know that we are the juniors doing the work, then managers review, then senior managers review, then partners review. And for partner, let's say the time allocated is only 30 minutes and he cannot take 1 hour. But for some assignments, he will have time allocated even 1 hour. So that would always depend upon the kind of service that is being rendered. Hence, target costing application in these service industry is very, very challenging and very, very difficult because of this mnemonic shift. There is simultaneous consumption, heterogeneity, intangibles, you cannot see them, touch them, feel them, and perishability, due to which, and no transfer of ownership. You cannot own me after this and say, ma'am, you gave me your lecture, no, now I own you. Now you speak the topics and I will do that work. You cannot own me, right? So there is no transfer of ownership under services, right? So this is the mnemonic shift that tells you this. So in short, your service industry is where, although we can attempt to try to fix a target costing, but it's very, very difficult to it. So most appropriately, it is applied in manufacturing industries only. Okay. So for manufacturing industries, we have this target costing setup and it is convenient for us to apply over there. So all those who are in line currently, who are live, please tell me, are you absolutely crystal clear with what we have discussed today for absorption costing, for ABC and for target costing? Any questions, any queries, any doubts over there, please put up in the chat box. Are you all thoroughly clear? Those who are online, just revert back quickly because we are done for the day. Now quickly, I need this response so that I can log off and see you all tomorrow, but at a change time. Make a note of it at 10 a.m. And we will be covering some very critical topics like throughput, like CVP and life cycle costing. So be there for your third and final YouTube live session, 4 p.m. December 2025 at 10 at BB Virtuals. And don't forget to like, subscribe and share my channel ACCA with Anshu Budhia so that you receive more updates during this course of your exam preparations. See you all tomorrow for your live session, and any queries and concerns you can